Hey traders, Raghee here. The most common question that I'm getting today, no doubt, throughout today's Monday session is, which way are we going? And it does really all depend on the underlying market structure or trend. And that means we're differentiating trending markets from non-trending markets. Trending markets have a different set of strategies and indicators that work well in that environment. Non-trending also has its own set of indicators and strategies that work well in that environment. And so it's our job as traders to get through that part of the analysis first. So let's kick it off with the indices. We're taking a look at the daily time frame here. Now, mind you, every single indicator on this screen can work on different time frames, but if we're looking at the most psychologically significant time frame in terms of what traders are thinking, or really what they're doing, what they're thinking, and likely what they're going to keep doing, it's that daily time frame that really decodes that the best. All right, so S&P is in chop. We know that because if you take a look at right here, by the 1st of December, confirmed chop, and that means absolutely at that point, I'm not looking for trend following anymore. We're looking at the lower yellow JT multi-row, as you can see right down in here. So it's lower yellow. I'm really looking at a non-trending right at this point here. And now we can absolutely start focusing on slow stochastic levels for overbought and oversold, and getting up in this area. Are we once again overbought? You guessed it. So what I'm looking at is a range bound market. And then as it approaches the range extremes, whether it's the previous lows, whether it's the previous highs, whether we have the Darvis levels helping us out, which is always, really, really helpful. Then we make our way down to the slow stochastic down here, right? Then we make our way down to the slow stochastic. And then we sync up those highs and lows in price with the reading of overbought or oversold at the slow stow level. So I'm not quite oversold yet on the S&P. You can see we're only at the midline. That's this yellow line right there is the midline. We're not quite at the oversold or the way we were here at the overbought level. So that doesn't mean that the market can't bounce, because quite frankly, when the slow stow, a price-based indicator, can't quite tell me what I need to do, I'll look to another indicator. Right here, I have the V-score saying, hey, we're back at that +1 standard deviation, and that's been a really good support level on the previous 3 lows. So that bodes pretty well going into tomorrow's FOMC. Moving over into the NASDAQ. The NASDAQ has taken out the price levels. You can see that here. It's taken out the Darvis levels that we would normally look at for support. And that's fine. I don't think it's necessarily a bad thing to break support levels when the market truly hasn't reached its overbought or oversold level quite yet. If you're looking for the Darvis to have confirmation, once we get to this price level here, jump on down over here. Yes, we're finally at the support of the 20 reading, but this is what I like to see. We want to see us get down to the 20. Then we want to see that shift. There's your signal right there. That shift from green, or that red to green. You can see that there. Shift from red to green. I'm really looking for something like that here. Otherwise, I don't have the indicator confirmation that, yeah, price could stop at that level. I mean, look, price could stop at right here. I've got a beautiful volume ledge right there, right? I've got a 200 propulsion right down here. We could head lower before we head higher. Nonetheless, though, we're definitely focused on the long side, just waiting for the setup. And another alternative is, if this here is a minor low, keep an eye on today's high for a potential breakout. That's another thing we can look at. Again, remember, we have Powell testifying tomorrow starting at 10 a.m. All right, moving on to the Dow. Dow is not oversold. It's actually looking like it wants to organize into an uptrend. Remember, if we can cut the range in a choppy market, I'm going to do that right now. There's your range. Once we get to that midpoint, we're putting a lot of tools here together. Notice I'm not just relying on one tool. This is Fibonacci. This midpoint, powerful. Absolutely powerful. So if we're going to find some support on the Dow, I'm going to be looking for it around 15,670, 680. All right. Taking us on over to the Russell. When is the Russell going to be oversold? Well, let's start with price. I got a Darvis level in here, got another level down in here. So the common question is, well, Rag, which is it going to be? I could do two things. I could look at the previous lows on the V-score, and we're getting really close. See that there? And, of course, I could wait for the slow stow to get down to 20, get down to this 20 reading. Right? Now, a lot of folks ask, Rag, how can we make the slow stow more aggressive? You've got such a slow stow with the 21K and the 3D. You know, you can bump a 20 to a 25. You could bump it even to a 30. Those are very common. And so you could also do something where the upper level is 80. Some people might use 75. It's not uncommon to even see a 70. That's how you make it more aggressive. I don't like to shorten this. These settings work. They work on 1-minute charts, 5-minute charts, daily charts, weekly charts. These settings work. All right. But if I want to make it a little more aggressive, let's say I want to turn it up a little bit and just see, you know, for example, I could just turn this into 30 and see where we are, right? We're still not there. Do you see that? We're still not at that oversold reading. So these are all things that you can think about when you're looking at whether a market's oversold or not. And I'm going to really look for something to get down to closer to 2100 before we have an oversold Russell that we could buy. So there you go. There's a look at the broader indices, and what we can do knowing this is realizing that all 4 indices are in chop. We know the sectors that are going to be influenced by this. We know the stocks that are going to be influenced by this. But as Powell comes up tomorrow, these could be interesting levels for potential buys, not for shorts. I'm not bearish this market. Oversold chop is a precursor to a buy. All right. Hope that helps. You know, keep an eye on the structure first. Once you've got the structure, then ask yourself, do I use trending indicators for this particular setup, or do I use choppy indicators? All right. And in the meanwhile, if you have questions and you want to join our pre-open, our pre-bell morning show each and every day over at the Simpler Trading YouTube channel, you can head on over there, Simpler Trading YouTube channel, and join us for Charts and Coffee. It's our 20-minute pregame show where we take your questions, talk about the market. I do some live analysis before everyone heads over into the rooms. All right, have a great one, and I'll talk with you soon. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.